Hello everyone, welcome back to Fundrise Finance. 2023 so far has been an amazing run for the Bulls, with the S&P 500 notching more than 8% year to date. That's just over a month. The Nasdaq, which fell more than 30% in 2022, is already up more than 15.5% in just over a month. When we look at the year to date performance, we see the communication services doing the best, more than 18%, followed by consumer cyclical, which is a discretionary sector, up more than 17%, and technology almost 16%. So you see a pattern here. The three sectors which were heavily beaten down last year are the top performers so far, and energy, healthcare, and consumer defensive, which were the best performers in 2022, have been the laggards so far in 2023. So we see sector rotation happening over here as we, as dividend growth investors, always look for deals in the market, and that is what we'll do in this video today, where I will be looking out for 5 stocks that offer good value even though the market has run up so high year to date. Let's check it out. But before that, let's give a quick look at our dividend picks for the month of January, where we had Taiwan Semi, United Health, Lowe's Companies, Pfizer, and Medtronic. Of these, Taiwan Semi has just zoomed past, up almost 28% in the last 1 month, followed by Medtronic, up by 11.5% almost. Then we have Lowe's, up 8.5%. Now we have two down performers here, United Health, down almost 9%, followed by Pfizer, down more than 14%. So we have two companies from this list which also make the cut for February. Now, which are those? Please stay tuned till end of the video to find them. And so without any further delay, let's get started with our dividend picks for the month of February 2023. First on our list, we have the Toronto Dominion Bank, ticker symbol TD. Toronto Dominion Bank is from the financial sector that provides financial services in Canada, United States, and internationally. Year to date, we see the TD Bank rising almost 7.5%. The last 1 year, it's down almost 17% and has returned over 20% in the last 5 years. TD Bank has a market cap of $125.06 billion and currently yields 3.98% at a forward PE of 10.17. From a dividends perspective, TD Bank has been raising its dividends for the last 8 years at a 5-year growth rate of 7.98% and a good payout ratio of 40.45%. From valuations perspective, Morningstar considers TD Bank a 4-star stock with a fair value of $72. Value Line has a midpoint price target of $102. CFRA considers TD Bank a 3-star hold with a 12-month price target of $70, while Zacks has a 12-month price target of $77. As for my calculations, which considers current and historical yields, I found TD Bank to have a fair value of $69.93. That's almost $70. Averaging all these, we get a final average value of $78.19, which makes TD Bank undervalued by 13.4%. Second on the list is United Health Group, ticker symbol UNH. United Health Group is from the healthcare sector that provides health benefit plans. We had United Health Group even in our January list, and as we earlier saw, it has taken a real beating in the month of January. Year to date, it's down almost 9%. The last 1 year is down almost 3.5%. For the last 5 years, United Health Group has returned almost 110%. It has a market cap of $441.03 billion and currently yields 1.4% at a forward PE of 18.93. From a dividends perspective, United Health Group has been raising its dividends for the last 13 years. The 5-year dividend growth rate is an amazing 17.36% at a very low payout ratio of 28.84%. From a valuations perspective, Morningstar considers United Health Group a 3-star stock with a fair value of $462. Value Line has a midpoint price target of $666. CFRA considers United Health a 4-star buy with a 12-month target of $595. Zacks has a 12-month price target of $514. As for my calculations, I found United Health to have a fair value of $484.93. That's almost $485. Averaging all these, we get a final average value of $544.39. That makes United Health undervalued currently by 15.33%. Third on list is American Tower Corporation, ticker symbol AMT. It owns and operates cell towers, which are critical for our day-to-day communications. Year to date, we see American Tower rising almost 3.5%. Last 1 year, it's down almost 11.5%. Last 5 years, though, it has returned a good 58.5% almost. American Tower has a market cap of $103.39 billion and currently yields 2.81%. From dividends perspective, American Tower has been raising its dividends for the last 10 years at a very good 5-year growth rate of 17.47%. The payout ratio is high, 93.64%, which is typical for any REIT, which by law have to pay out almost 90% of their revenues back to shareholders. From valuations perspective, Morningstar considers American Tower a three-star stock with a fair value of $210. Value Line has a midpoint price target of $290. CFRA has a four-star buy rating on AMT with a 12-month target of $247, while Zacks has a 12-month price target of $240. As for my own calculation, I found American to have a fair value of $294.77. Averaging all these, we get a final average value of $256.35. That makes American Tower currently undervalued by 15.44%. Fourth on list is the Kroger Company, ticker symbol KR. Kroger is a national retailer in the United States that operates food and drug stores and also multi-department stores. Year to date, Kroger is almost flat. In the last 1 year, it's returned a negative 1.5%. The last 5 years, though, we see a healthy return of almost 53%. Kroger has a market cap of $31.80 billion and currently yields 2.34% at a forward PE of just 10.73. From a dividends perspective, Kroger has been raising its dividends for the last 16 years at a very good 5-year growth rate of 13.92% and a very low payout ratio of 22.71%. From valuations perspective, Morningstar considers Kroger a four-star stock with a fair value of $52. Value Line has a point price target of $56. CFRA has a 12-month price target of $45, while Zag similarly has a 12-month price target of $49. I found Kroger to have a fair value of $51.27. Averaging all these, we get a final value of $50.65. That makes Kroger currently undervalued by 18.74%. The fifth and final stock on the list is Pfizer Inc., ticker symbol PFE. Pfizer is from the healthcare sector and that discovers, develops, and manufactures biopharmaceutical products. Now, we all know Pfizer is one of the companies that developed the COVID vaccine. Year to date, we see Pfizer down more than 14%. Last 1 year, it's down almost 17.5%. Last 5 years, it has returned almost 32%. Pfizer has a market cap of $247.32 billion and currently yields 3.72% at a forward PE of 12.26. From a dividends perspective, Pfizer has been raising its dividend for the last 12 years at a 5-year growth rate of 5.51% and a good payout ratio of 24.32%. From a valuations perspective, Morningstar considers Pfizer a three-star stock and has a fair value of $48. Value Line has a midpoint price target of $72. CFRA considers Pfizer a four-star buy with a 12-month price target of $52. Zacks has a 12-month price target of $48. I found Pfizer to have a fair value of $45.15. Averaging all these, we get a final average value of $53.03. That makes Pfizer currently undervalued by 20.36%. So to summarize the stocks we discussed till now, we had American Tower, TD Bank, Kroger, Pfizer, and United Health Group. Now, as we just saw, all of these stocks are great companies in their own sectors and are currently undervalued anywhere between 13% to 20%. So in this current market, we can still find such good deals for great stocks. That is what we intend to find. Buy great companies at good prices. Hope you all like this video and I'd really appreciate if you could hit that like and subscribe buttons so that YouTube can suggest this video to many more out there and that would help promote this young channel. And also let me know in the comment section what stocks are you looking forward to buy in the month of February. And until we meet in the next video, let's do as much as possible to be financially healthy and keep continuing to take the small strides towards our financial freedom. See ya. Bye.